I wanted to share with you, all viewers, listeners, kind of just what's been going on. I'm at an event. It's a 3-day event. Family offices from mostly the United States, but also from really around the world. I've been speaking to folks from, South America, Central America, Europe, Russia, and then, all across the United States. There were a handful of asset classes people were investing in that I found interesting. Now, I'll save the obvious one to kind of the end. But one which is sort of surprising, you hear a lot of talk about, but that's cannabis. Ton of family office investors in general are trying to hitch their wagon to this whole green rush that's happening. Because the majority of states in the United States right now have some form of legal marijuana or cannabis, whether that's from the medical side or full recreational. And without the banking system really being able to really handle cash flows coming into these dispensaries, it's created this weird patchwork and with a lot of problems. And when there are a lot of problems, there's people trying to find solutions, and you create a solution, you've got a pretty good investment idea. And so there's a lot of, they see this as a revolution, and it's taking over. The cat's out of the bag, genie's out of the bottle, or whatever.
Yeah.
How do you get involved in it? I mean, it's growing so fast, but a lot of families don't necessarily want to invest in the production of like the growing, but it's all right. How do I invest in the processing systems for either on the banking side, or whether it's the packaging side?
Oh yeah.
Or maybe it's just the retail or the real estate. Like, okay, I'll buy the warehouse and lease it to you, but I don't want to actually invest in the business itself.
It is like it's a normal job now. It's a growing normal industry, and it is not the hippie weirdos at all. These are like clean cut, this very polished image that these early adopters, at least in a lot of places of legal cannabis organizations, are taking.
Yeah,
that's my impression at least.
It's big. It's big business, and I think that there are a lot of kind of more amateur or kind of the hippies or whatever you want to call them who got into it, and some of them probably know what they're doing. Some don't. I was having a conversation. It's one thing to grow some weed in your basement with a couple of grow lights. It's a whole other thing to really be in the business of industrial agriculture, industrial plant production. I was in the agriculture industry for a while. I owned a hop business. We grew hops. We also were brokering hops for the craft beer industry. Hops and marijuana are actually, they're in the same family. They have a lot of relation. We were having conversations with a lot of people in the cannabis industry at the time. I talked to a lot of people who were getting ready to get into the space, and they saw it as like they were producing widgets and like, we're going to scale and do all this stuff.
Yeah.
I'm like, well, have you ever grown anything at scale? It's not easy. It's hard to really scale up. And again, you could have a grower who's got some experience, but again, can they actually scale what they're doing? So there's been a lot of bifurcation, but the cream's rising to the top right now. People who are serious know what they're doing. They're creating some investable companies.
And I think it is worth mentioning too that a lot of these states have significant hurdles for companies to jump through that make it a little bit more difficult to enter the space. And the fact that there are companies that are still doing that and still, at least as far as I know, they're making a lot of money on it is a good sign. Now, it could be a little bit of like regulatory capture in that these companies have a hand in kind of suppressing the new businesses getting on board. But it does seem like it seems like in spite of a very tight and regulated control in some states, that there are businesses that are making profits. So
for sure. So the next piece is, I don't know why I think these two are related, but crypto. Obviously the huge crypto craze. We've talked about cryptocurrencies. We track cryptocurrencies on Gray Report, on the newsletter. Less interest in buying the actual tokens or currencies. More interested in back-end technology and just blockchain-oriented technology. I could multiple times like, I'm not really investing in the coins. Maybe I've bought a little Bitcoin here or there, but they're really interested in just blockchain technology and practical solutions and applications that are really solving problems. Matt, we were talking just before we went on, there's a lot of solutions in search of a problem. A lot of discussion of tokenizing things that don't need to be tokenized, putting things on the blockchain that don't doesn't really, help solve a problem. I heard someone talking about, not this conference, but watch a video recently. This guy talking about these decentralized autonomous organizations that are essentially run off of smart contracts. Basically, think of a company, but its operating agreement is all in the smart contract, and it is really purely democratic organization of where your tokens and voting rights and all that. And it's all digital. It's all done on the blockchain. His idea was basically to create like a gym, like a fitness gym, and he basically said how people were going, early investors were going to get a certain amount of return, and then you'd get these NFTs as your membership cards, and you could get like perks for going to the gym. And I'm like, why? There's no problem you're solving there.
Yeah.
It's like you could just, because he was like, they don't have a one piece of equipment, so I'm going to open my own gym. Well, you could open your own gym right now, get investors, give them, whatever return profile for whenever they invest, through different rounds of investment. And, you can have punch cards or whatever member benefits. You don't need NFTs for that. Like, it might be cool to do, but there's no problem being solved. But in other cases, there are.
And that's what seems to be the most interesting for me is like, what are their opportunities? Because if you had to start from the ground up, if there were not systems, it seems like it would make sense to implement some blockchain technology to track transactions. And especially, you get like a deed or a contract that's on the blockchain, and it's locked down in a way that papers and files may not be. And it seems like that could really help, but there's a lot of people and there's a lot of systems that's already doing that, and it would take a whole lot of work to just switch it right over.
And that's the problem, is we've got a system that we've been doing it. It's been fine. We don't want to throw the baby out with the bathwater. But I do think just think about operating agreements. There's, even though you're laying out how everything should happen in a business with certain events, there's still interpretation. Language gets put in that is purposely vague for whatever reason, and there can be some interpretation. Some people don't even look at their operating agreement or follow it. What a smart contract does is it takes all that, the opinions out, the interpretations, and getting a lawyer to look at it removes the trust. There's no trust involved. It's just truth. Like, you don't have to trust anybody. It's 100%. It is what it is. A smart contract, it follows the math, and the math doesn't lie. So I think that, from a financial perspective, I think is very powerful, and it does solve multiple problems of, if we've got this document now, 3 different people are going to interpret a section, a couple different ways. Really interesting conversation. Fast forwarding to continue to talk about real estate, but is the tokenization of real estate. In this debate, it was a really interesting roundtable discussion that I was involved in about the whole concept of the tokenization of real estate. One group, was really making some headway, haven't got it completely figured out. They're essentially doing multiple Reg A fundraisers, and those Reg A investments are going to be tokenized and you put on the blockchain, and eventually the Reg A piece goes away and dissolved, and then they just have the tokenized real estate. They haven't done it yet, but they're in the works right now, setting up their Reg A's.
You tokenize this. What would that allow you to do? That opens it up, right?
Well, so that question is, what's the point? And what problems are you solving for? The first problem you're solving for is liquidity. Right now in real estate, there are no real secondary markets for units of private placement. So you invest in real estate syndication, you have that unit, but if you want to get out early, or if you want to buy in afterwards, there's no real secondary market. It's kind of a long process. Oftentimes you have to get permission from the manager, the sponsor. There's no real open market. So it's just negotiating, what am I going to pay for? What are you going to buy it for? If it was tokenized, you could just sell that token that includes the membership to that investment on, theoretically, any exchange that allows you to sell it. There's no permissions necessarily required, although I guess theoretically they could be. But what the problem it's solving for is liquidity. So all of a sudden you invest in a real estate project and it's doing really well, like really well. Like, so, let's say, we'll talk about apartments, they've increased the rents, NOI is up, doing really great. It's got good track record. You invested, before they bought it or whenever. You may want to cash out for whatever reason, but you don't want to wait for the sponsor to sell. You can go on to an exchange, sell your token right away, and there's no restrictions. And then the big question is, well, the price, has to be relative to the actual fair value, intrinsic value of the asset. It's like, well, yeah, it's sort of relative, but what really matters, we're really allowing the market to take place. An individual could say, okay, so that token it's throwing off an 8% cash on cash return. I think that there's more upside to the project. I'll pay twice what you paid for it. I'll take a 4% cash on cash return because I believe in the upside. And so we're allowing the market to take place to really set these prices, as the project is going on. And so you're adding a lot of higher frequency trading possibilities and price discovery on these, what were formerly private placements. It could really change the market, because then all of a sudden, as the comment was, the guy's like, well, the value has to be related to the real estate. The response was, well, what is the value of AMC and their, cash flow have to do with the price?
I was going to say, well, volatility is my kind of my concern there.
Volatility and speculation.
Yeah.
And in real estate, we're like, well, the reason we like real estate is because, the issue was, okay, well, does that make these real estate investments more correlated to the market? We like real estate because of its uncorrelated factors to public markets. It's higher frequency, higher volatility. Does that, all of a sudden you're more correlated. And I think that could be the case. It doesn't make real estate a poor, a worse investment compared to any other type of, public security that you can buy. But really the result of all this is you're making the market efficient. Yeah. Real estate is very efficient. Now you could say, I have the opinion that real estate is a great investment because of the inefficiencies. You can take advantage of that. But efficient markets are better for the market.
Yeah,
and it eventually can be less volatility.
And with volatility, there is an association of a larger upside if you're making the right decisions. But my bigger point would be that there is a fundamental aspect of real estate. It's going to be a physical asset. Its value is still going to be tied, at least somewhat, to the kind of the cash flow that will present, and that's not going to change through the course of an investment.
And it's really no different than any other company. And really, the derivatives, the financial derivatives, whether that's be options or different types of stocks, different types of derivative instruments, it's really no different. That's already happened, but you're doing on the blockchain, which I think you could argue is just a much better system. And to your point, if we threw everything out, we had to start from scratch, we would use the blockchain. Yeah. And so it's really no different theoretically. That's already happened to the financial system. It's just being done in maybe a better way. And it's very similar to what happened in the 80s with REITs. REITs allowed individuals to buy commercial real estate on the stock market, to buy a fraction. It's the fractionization of real estate. I can take $100 and invest in a company that's buying a skyscraper in San Francisco. Now the same thing is going to happen with tokenization. I'm going to buy $50 of a token and invest in multifamily property in, Kansas City or wherever, and I can sell it. And that led to this whole idea of, kind of the old guard saying, well, why would I do this? I don't need to do this. And I'm probably not going to do it. And that's okay. And what they weren't understanding from my perspective is, this opens up real estate investing to a whole new cohort of investors. The crypto investors, millennials, Gen Zers, who still like the idea of buying real estate, but they're doing but they want to invest on their phone. They want to invest through Robinhood or wherever, and they get crypto, they get the blockchain. It makes sense for them. And so you're growing the pie of investors into real estate, not to mention foreign investors. It really grows the pie. Now, regulation that's a whole other, can of worms that I don't even know where to start, because it's much more unregulated. And I think regulation is going to still be slow to catch up until they make a mistake and they they could easily, screw
Yeah.
things up because they don't understand it. But it was fascinating discussion, and the feeling and what people are saying is that it's going to be here sooner than we think.
Yeah.
The prediction: Blackstone is going to be having tokenized funds the next 18 months.
Well, and I could see a lot of firms doing it for just because they speculate and they know where it's going, and some are going to do it because it's appealing. Some are going to do it, and this is from a marketing perspective, because it'll get them noticed. But I don't think that there's a real good reason to not try this out if you're able to.
I think, and that's what I'm waiting for, because we've talked about this a lot in the past. This isn't the first discussion that we've had, at least internally, about tokenization, different ways to do it. I don't want to be necessarily the first, or our investors to be the guinea pigs. I want to find a structure that really makes sense, that's solid. But as soon as we can find that, I think that having that as an offering makes a lot of sense, because I think it is the future.